This is Ag Matters PM from the Iowa Agribusiness Radio Network, brought to you by the Iowa Soybean Association, your daily recap of the information that affects Iowa's farmers, producers, and consumers, right here in the heart of the heartland. With reports from our award-winning broadcast team of Dustin Hoffman, Riley Smith, and Mark Magnuson. Now, from the IARN studios in Des Moines, here's Dustin Hoffman.
Hello, everyone, and welcome to Ag Matters PM from the Iowa Agribusiness Radio Network. I'm Dustin Hoffman. Today is Monday, August the 26th, 2024, last full week of the month, and of course, Farm Progress Show kicking off tomorrow. We're so glad you could join us. Coming up in today's show, I will talk with United Soybean Board Action Team lead and also Iowa farmer April Hemis about an event she was at in San Francisco last week with the U.S. Soybean Export Council. But first, let's go ahead and run down the markets.
It's time now for the Ag Matters PM Closing Market Summary, your source for market analysis and settlement prices from the day's trade in Chicago, courtesy of the folks at agmarket.net.
We're at the end of the trading day, and it's time now to talk with Robin Schmahl of agmarket.net. And Robin, I know we got a little off to a rough start here in the beginning on the overnight session and got a little bit better during middays, but where did we close on those grains today?
Well, the corn market was under pressure, and the soybean market really came more to life as we started moving into the close up over 8 cents. And so that was a little bit of a surprise. Meal supported that movement. I mean, if you look at the results of the Pro Farmer Crop Tour, you wouldn't think that would have been the movement for today. But, traders just seem to have different ideas. And you always have to look at it and say, well, those markets had that factored in already, so now they just moved accordingly, and that's what happened. When we'll get to the cattle market as well, same thing. They kind of move in the opposite direction because it's already has it factored in to some degree. So we started out this morning with export inspections. Corn was at 35.207 million bushels. That was down from last week's 47.506 million bushel. So not a lot of support there. Soybean, 15.108 million bushels compared to last week's 14.905. So somewhat neutral in that aspect. Wheat was 19.738 million bushels compared to last week's 13.695. So a lot of that was somewhat in expectations. So nothing really surprising or nothing to really be negative or positive to the market as such. But probably the bigger issue that we maybe see in the underlying situation is Commitment to Traders report showed funds as net sellers up until the report last week, Tuesday, of 4,000 corn contracts, bringing their net short position to 257,000. And that's a record short in corn for this time of year. In the soybeans, the funds sold 13,000 contracts to put them at a net short of 168,000. Again, it's a record short in soybeans for this time of year, not a record overall, but for this time of year. So it shows the attitude of the managed money traders, the fund traders, that they don't see a lot of upside potential in this market right now. You've got the issues with the old crop sitting there. We've got issues of what's Binske is going to be, farmers wanting to sell now and some of the elevators rolling to other months and dropping the basis because they don't want the stuff right now. So it's in a bad situation really for the farmer at this point in time. If they held on to grain to try to move it now, it's not a good week potentially for them to do that. Now, overnight, September contract in corn made a 4-year low. So that's pretty hard to take when we look at where we were a year ago and where we were, during the last 2 to 3 years, to see where we are right now. But such as the market runs by supply and demand, and in this case, potential supply coming in for the new crop. And as I tell some of my customers, the market doesn't care whether the farmer makes money or not. It's going to move by supply and demand. It's up to the farmer in order to manage their risk. And that's That's very evident as far as this year is concerned. Now, on the other side as well, the U.S. dollar index, the U.S. dollar, I should say, made a 13-month low overnight. Now, you should anticipate that if the U.S. dollar is moving down, it should increase or spur some of our exports, but that's not necessarily the case at this point in time. Now, Ag Rural said that Brazilian farmers are starting to plant corn for the 24-25 crop year. So they're just getting started on that at this point in time. The Canadian rail workers mandated to return to work, where they were going to go on strike last week. Now the union is going to challenge that labor board mandate. So that's going to be an ongoing situation. Nothing's been settled there, but they are mandated to work. They are going to be continuing to work on arbitration to try to work that out. Now, on the summary of the Pro Farmer Crop Tour last week, corn yield there, they predicted at 181.1 bushels to the acre compared to USDA's 183.1. Soybean yield at 54.9 bushels to the acre compared to USDA's 53.2. And that's where the trade follows the Pro Farmer Crop Tour quite closely. So looking at those numbers, you would have anticipated corn maybe would have had a little bit of strength today, where soybeans more weakness, but again, it did the opposite. So, we'll take anything we can get with any kind of a bump in price in any one of these markets.
And now moving over to the livestock side, I know you hinted about cattle here at the beginning of our talk, and the cattle on feed report came out after the close on Friday, and not exactly what everybody was expecting, but how much of an effect did that have in the marketplace, and how did that rank up compared to what the expectations were?
Well, it was one of those things where the market opened lower and quickly found footing. The report was more on the bearish side. The on-feed numbers were 100%. I'm sorry, the estimates were 100% on feed on August 1st. The actual came in at 100.3%. So not a big difference there, just slightly higher. Placements, the trade was estimating 104%. They actually came in at 105.8%. So more on the bearish side on that standpoint, and slightly above the top end of the trade estimates. The range of estimates went from 101.9 to 105.6. We came in at 105.8, so that put more of the negative or bearish tone on the market. And marketings in July were at 107.7. The estimate was 108.2. And the 107.7 was just 0.1% below the range of the estimates. So when you look at all of those together, we had a little bit more of a bearish tilt to the market. But again, traders had other ideas because they seemed to have that factored in already. Knee-jerk reaction was a lower opening, found the strength, the support, and the market moved higher. So overall, it's going to be a good close relative to the report. Not saying that the bottom is in at all in that market because of it, but the trade's just trying to adjust relative to the expectations relative to the actual. Now, last week we had Northern dress cattle sales were down $5 and Southern lives were down $2. So that piggybacked off of the previous 2 weeks of lower prices. Now there is a real anticipation for lower cash again this week. That feedlots have been holding out for hopefully higher cash. Well, they got to get to the point where they've got to move cattle, and they may again be a little more aggressive and take those prices that are being bid for them. Because one of the negative things over this last week was 42% of the cattle that were purchased for deferred delivery. So that's been increasing. I think it was 2 weeks ago, we were at 20-some%. Last week, we were a little over 30%. And now this week, or from last week to this week, last week's purchases were 42% for deferred delivery. So that does not bode well for feedlots trying to band together to hold out, and futures are lower. Even though we've had a little bit of a bounce recently, they're still having a potential for a real struggle to move to the upside. Now, my midday box beef today was lower. Choice was down 36 cents, select down $1.45. So we looked over at the hogs then, but the hogs, the futures struggled. I mean, they were moving higher initially, but failed to follow through from the strength of last week, at least for today. Cash was not published at the midday because of so few hogs traded, so that they really didn't have a good idea on cash. But the negative thing that came out at the midday report was the cutouts. Cutouts were down $4.21 on the midday report. There was a large drop in hams, bellies, and loins. Hams were down $7.35. Bellies down $6.56, and loins down $6.44 on the midday report. That will adjust as we move through the end of the day, but that does not give a whole lot of hope for at least the support coming from the cutouts. And cash generally is not strong on Monday as the packers sit there and wait for evidence of demand over the weekend. So I think if we see anything, it might be a little bit lower as far as cash is concerned. So we're going to see more of the buying delayed till Tuesday and Wednesday, which maybe then could see a little bit higher cash and be a little bit more supportive to the hog market again.
All right, Robin. Well, if folks want to look at more of the analysis that agmarket.net has or talk with a broker there, what's the best way for them to get in touch?
Well, you can call me directly at 877-256-3253. Go to our website, 844 numbers listed there. There's other information on their website that you can sign up for to receive that give you a lot of market information. Feel free to call in and somebody will be glad to help you.
All right, Robin. Well, we thank you so much for the insight, and we'll talk to you again next week.
All right. Thank you. It's always a pleasure.
That again was Robin Schmahl of agmarket.net. Let's go ahead and run down those closing numbers on the Iowa Agribusiness Radio Network market screen.
At the close, September corn down 5 3/4 at 362 even. Front month soybeans up 7 3/4 at 959 3/4. Soy meal up $5.80 at 312.10. Soy oil 23 cents higher at 41.70. Chicago wheat down 4 1/4 at 498 even. Kansas wheat up a nickel at 5.25. Minneapolis spring wheat down 10 1/4 at 5.41 1/2, and oats down 4 cents at 3.21 even. Live cattle up $1.27 at 176.97. Feeders up $2.77 at 241.35. Lean hogs 15 cents lower at 80.40, and pork cutouts unchanged at 90.92. Class 3 milk 75 cents higher at 22.54.
And that's been our closing market recap. We're going to take a short break and hear from our sponsor, the Iowa Soybean Association, and the Soy Checkoff. And speaking of Iowa soybeans, we're going to hear from Iowa soybean grower April Hemis coming up next on Ag Matters PM.
Iowa Soybean Association is driven to deliver for Iowa's 40,000 soybean farmers. We're proud to provide objective agronomic research, a helping hand with soil and water stewardship, and timely industry news powered by the Soybean Checkoff. Learn more at iasoybeans.com.
Welcome back to AMPM from the Iowa Agribusiness Radio Network. I'm Dustin Huffman. Well, last week, U.S. Soybean Export Council held their Connect event in San Francisco, pairing board members of the United Soybean Board and actual soybean producers with some of the buyers out there who are wanting to ask questions about the products they're getting. We had a chance to talk with April Hemis right now from the United Soybean Board, Iowa farmer, and of course, the United Soybean Board Action Team Chair. And April, first of all, tell us a little bit about the event in San Francisco.
You bet. Yeah, I'm out here for United Soybean Export Council's, it's called Connect. But what they do is bring in soybean buyers from all around the world. And I got to introduce a couple sessions yesterday and talk about my farm and the sustainability I do. And so over 400 buyers are here. So it's pretty exciting times. You know, it's amazing. I got on this board 9 years ago, and sustainability, you know, it wasn't really a thing then, and we really started bringing it up, and because we could see consumers were asking for it. I mean, it was coming from the ground up. And quite honestly, U.S. soy farmers have the best story to tell in the world for sustainability. So it has really become a huge topic. In fact, the whole afternoon yesterday was focused on that. And so it's really great. And then we had Ask a Farmer Corner, and we had a couple Iowa farmers and an Illinois farmer, and we were just deluged. I mean, these companies really wanted to engage and talk with us. So it was good, and they really care about where their soybeans are coming from.
And of course, we understand consumers are wanting to know more about where their food and products are coming from, and they have that right. So what kind of questions are you getting from these buyers?
Well, like how, what I talk about is how I raise my food and the no-till and cover crops we're using and variable rate technology, but you really have to put it in their terms so they can understand it. We talk farmer talk and we think everyone understands us, but that's really not the case. So, so they just ask, a lot. Well, yesterday was, do you grow GM or non-GM? And, I said, well, I'm 100% genetically modified because that's what my market is, close to me, but here are your options. They have a list of people. So that's one, and how I raise my crops, who I sell to, things like that. They're just really interested in what we are doing down on the farm. And quite frankly, that's exciting because we really do, like you said, we need to tell our story much better.
And April, do you think that the message that you're giving has been well received?
Oh yeah, I do. And I think because they're getting, I don't want to say pressured, but their consumers are really asking for it. And I always talk about that too. We know your consumers, the people who buy from you, maybe the end buyer or your buyers are really asking, for sustainably raised crops. And we have a U.S. sustainably raised label they can put on. And they said yesterday, I think it was a soy milk or some kind of a soy product used overseas, and it increased their business by 30% once they put that label on. So that's huge. That really says it all right there.
And that again was Iowa soybean producer and member of the United Soybean Board, April Hemis. And that brings us to the end of today's show. You can find all our content online at iowaagnet.com. You can also follow us on Facebook, X, and on our YouTube channel. While you're there, don't forget to subscribe and hit the bell icon so you can be notified for each and every video product we put out. Also, don't forget about the free market analysis sent to your mobile device 3 times a day. Openings, middays, and closings on the Iowa Agribusiness Radio Network podcasts. You can find those on Amazon, Apple, Google, soon to be YouTube, Spotify, and Podbean. From the IARN studios in Des Moines, I'm Dustin Huffman. For Andy Peterson, Mark Magnuson, and Riley Smith, we thank you for watching. This has been Ag Matters PM.